So in the scheme of the bigger picture, yesterday's correction in Ethereum really didn't matter a whole lot. It does give us a little bit of clue as to what the bigger picture Elliott wave count may be forming. We are looking at a wave 4 triangle, and ever since the high in May, we're carving out and we're almost halfway through this wave 4 triangle. This triangle pattern would look for a range trade in that upper teens, low 2000s on the bottom side, up to this mid, let's say 4,000 to the upside. So this would be a range that would last most, if not all, the rest of calendar year 2021. There is another pattern that I'm looking at, which is a lot more bullish, and that is we are unloading in a wave 3 of 3 higher. We may get some, a temporary correction that may carry us back down into the upper teens, the lower 2000s, but that's, I don't think we're going to see much of a dip below there. Hi there everyone, this is Jeremy from See the Waves, and today we're going to take a look at the Elliott Wave analysis for Ethereum, which is the second largest cryptocurrency. So yesterday we had a pretty good sell-off in Ethereum, but as you can see, this is a weekly chart, it barely was a blip on the radar. Now we're using log scale on the right-hand side. So in the scheme of the bigger picture, yesterday's correction in Ethereum really didn't matter a whole lot. It does give us a little bit of clue as to what the bigger picture Elliott wave count may be forming. And so for that, there are two main Elliott wave counts I'm looking at from a longer term perspective. The first one is that we are looking at a wave 4 triangle, and ever since the high in May, we're carving out and we're almost halfway through this wave 4 triangle. Now this wave 4 triangle would suggest that we get some correction lower in Ethereum. This correction lower may take us down into the high teens, the low 2000s. That would finish off wave C, and then we would rally higher in a wave D that would be lower than the high that we saw here today or yesterday. And then another correction lower in a wave E to finish it off. So this triangle pattern would look for a range trade in that upper teens, low 2000s on the bottom side, up to this mid, let's say 4,000 to the upside. So this would be a range that would last most, if not all, the rest of calendar year 2021. And then from there, that would finish off wave 4, and then we would rally higher in a wave 5. This wave 5 would carry us much higher. This would carry us up into 5 digits, above 10,000. So still plenty of upside available if we're looking at this triangle pattern at play. Now there is another pattern that I'm looking at, which is a lot more bullish, and that is we are unloading in a wave 3 of 3 higher. So in essence, the rally in 2018 to 2019 was intermediate wave 1. The correction down into the pandemic low of March 2020 was intermediate wave 2. And then all of that rally we saw since the pandemic was minor wave 1, and that the correction over this summer was minor wave 2, and that we are unloading higher in a minor wave 3. Okay, so this type of pattern is extremely bullish. As a matter of fact, what I wanted to do is share with you just the differences of what these patterns might look like. So I created this idealized path, and within this idealized path, the first wave count would have put us, within that wave 4 of cycle wave 3. We would be about right here within this idealized path. Now on the second, more aggressive, that we're getting ready to unload in wave 3 of 3, we're probably somewhere around here. And so in both situations, moving up to 10,000 or above would be pretty easy. Within this secondary, more bullish wave count, that move up to 10,000 might only carry us to right here. So in the end, I don't think we're going to see the next major correction take place until we get to that 12 to 20,000 range, and that 12 to 20,000 range would either be at this place if we're on the wave 4 triangle, or it would put us at this place, which means there's still a lot more upside to go. So Ethereum, extremely bullish on. I know there's a lot of a lot of news swirling around about the updates coming, moving over to the proof of stake. And I don't think there's anything to worry about as far as a major correction coming on that front for some time. We may get under this wave 4 triangle pattern situation. Whoops. We may get some, a temporary correction that may carry us back down into the upper teens, the lower 2000s. But I don't think we're going to see much of a dip below there. Okay, so let's see what it looks like on an internal perspective here within wave 4. Let's zoom down into this daily chart. Okay, so on the daily chart, the summer correction was simply wave A of the triangle. We've rallied now in wave B of a triangle, and we're getting ready to sell off here in wave C of a triangle. Now, the good places to buy, obviously within this triangle pattern, you're going to be talking down here in the low 2000s to upper teens. Actually, we'd have to hold up above these lows. So this would be a good longer term buying point within the triangle pattern. The other pattern that we're looking at and that we're progressing higher in a wave 3 of 3, what that would look like is we had minor degree wave 1, zigzag lower minor degree wave 2, and that now we have begun that progression higher in wave 3. The sell-off that we saw yesterday was right after the end of wave 1, and that we are working lower here in this wave 2. Now we can add a Fibonacci retracement level to this pattern. Wave 2 generally is going to retrace that 38 to 61% level. And so that would put us, in about this zone. Let me make it a different color. Not red. So that would put us in this zone. So the more aggressive pattern, we're looking at the mid 2s as an accumulation zone. If it's a triangle, you're looking at low 2s, upper teens. Either way, a correction lower from the current 3,500 mark back to revisit the 2s would not be out of the question. I think it would offer up an opportunity to accumulate some Ethereum. Within this impulsive wave higher, we've got our 5 waves. We've got wave 1, 2, we've got an extended wave 3, triangle 4, and then a wave 5 that runs up to finish this larger degree wave 1. Real nice divergence taking place between waves 3 and 5 within the impulse wave. And then, like I said, many times after that impulse wave, you get a retracement back to that previous 4th wave, which is what happened yesterday. But we've only barely retraced the minimum retracement levels on Ethereum. So it is possible that it could just rocket higher from here and that wave 2 was finished. The problem with this is that wave 2 was very, very, very brief relative to the length of wave 1. Wave 1 lasted several weeks. Wave 2 would have lasted a day. Now, it's nothing unusual for us to see a wave 2 develop like that. I mean, here we've got a wave 1 and a wave 2 that was just like a propeller type of situation where you got the wick higher, then the wick lower, and then boom, off to the races. So we've got a similar pattern going on here, so it's possible. I just wouldn't bank on it right now. I would wait for some lower prices to come and use that as an accumulation zone. This would just be wave 1, and wherever wave 2 finishes, we would be looking for wave 3 to be a Fibonacci proportion to the length of wave 1. And so that's going to take us well up into this 6, 7, 8,000 range. And I think we are not too far away from that happening. Now this is a little more of a conservative route. There is a more aggressive wave pattern that I'm looking at, and this one shows that we have not finished that impulse wave to the upside. What this one shows is that we are going through wave 4 of the impulse right now. This wave 4 is likely just going to grind sideways, and then we'll get a move higher in a wave 5. So, probably just do something like this, and then a move higher in a wave 5. This will finish off the impulse wave, and then from there we would get a correction. Now, the ensuing correction on this more aggressive wave count, I guess this derivative or alternative of this wave 3 of 3 higher, we would need to adjust our Fibonacci retracement level. So, as the higher this wave 5 goes, we would adjust this Fibonacci retracement level higher. As we do that, then our 3.8 and our 6.18% retracement level, they move higher as well. And so the subsequent accumulation zone would move higher as this wave 5 moves higher. But as you can see, there's a lot of similarities and overlap between the two wave 3 of 3 patterns higher. There's overlap between those two patterns. Then you've got overlap between the wave 3 of 3 higher versus the wave 4. The wave 4 would show an accumulation zone at slightly lower levels. But the point being here, folks, is that I would consider it low possibility that it's going to just scream higher from here. We're probably going to get some more corrective moves at slightly lower levels into the below the 2,000 mark. I'm sorry, below the 3,000 mark. And it's below that 3,000 mark where we can begin to think about accumulation. So if you like what you see here, go ahead and subscribe, hit the like button below. Let me know that you like this type of content, and feel free to leave a comment as well. And we will see you in the next video. Best of luck in your trading. We will talk to you soon. Bye now.